Welcome, everyone. I'm Rob Leibel, head of the Americas at BMLL, and I'm joined today by Dr. Elliot Banks, our Chief Product Officer at BMLL. First of all, I'd like to remind everyone that this webinar will be approximately a half an hour. Time permitting, we will have Q&A at the end. Hopefully, you could just use that chat button that you find on the webinar. Also, this webinar is recorded. Elliot, anything that you wanted to say before we get going?
No, good morning and good afternoon, everyone. Hi, Rob. Great to speak to you again, and I'm looking forward to today's webinar.
Great. So for any new joiners that may not know BMLL, we are the historical market data specialist. We source raw data directly from the exchanges and venues. We harmonize that data so that it's globally consistent and make it, along with approximately 400 plus metrics and insightful analytics available to our clients. So Elliot, the US volumes have certainly evolved over the past 12 months. And in fact, in Q4, we saw that there was more off-exchange volume for the first time ever, crossing that 50% threshold. So tell us what's going on behind the scenes in the US and how does that compare, to the other regions?
Yeah, absolutely, Rob. And, talking of volumes, we've had huge volumes in the last few days as well, which is probably an entirely different topic that we could...
A little volatility, perhaps?
Yeah, just a touch. No, one of the big topics that we saw, sort of earlier this year was really that crossing of the first time of OTC volume being more than 50% of US equity volume. So what I've got here, is our view on BMLL Vantage of the US volumes, across the whole of the Reg LMS stocks going back from 2019 onwards. This big blue one here at the bottom is what gets reported through FINRA. This is everything that's not traded on one of the exchanges, and you can see, apart from a few spikes in 2021 during COVID, really. That's remained below 50%, but creeping up and actually crossing that 50% mark later last year and earlier this year. And it's worth pointing out, and I'm sure we'll talk about this a little bit more, but that when we say FINRA, that's a combination of two things. That's a combination of what's on the ATSs as well as what's going via wholesale brokers, so sort of pure OTC.
So, looking at US, how does this compare to, Europe and Asia, for example?
Yeah, so it's a similar theme that we've seen in other places. And maybe before we talk about that a little bit, just one other thing on that to point out, which will be important later on. You kind of see here that as well as the growth in FINRA, we've got the rise of other sort of the non-listing exchanges growing well. We've got the IEX has been around for a long time, but we've had MEMX and MIAX, which launched sort of 2021 period, and we started to see the change in LTSE when they changed their matching engine late last year to use as MEMX's technology. We're starting to see some market share growth there as well, and that's kind of a similar story to what we've seen in Europe with CBOE and some of the other secondaries taking market share from the primaries. I guess in the context of OTC volumes as well, as we'll just pull up now the Vantage view here, you can see that it's kind of a similar story. Now, here again, I've picked the same time period. I've just picked equities in this case, and I've done a couple of other things on this chart as well. Firstly, I've removed what we call our special sort of non-addressable liquidity. The reason is you see there's this big drop-off sort of mid last year in terms of the special price volume. That's not a sort of market phenomenon. That was a regulatory change that happened with the FCA and how things are being classified. So we've pulled that out. And anyway, this is all non-addressable liquidity, so it's kind of not interactable anyway. But you can see it's really a similar story. We've got the fall off of lit continuous trading. That's not really been boosted in areas like, systematic internalizer. If anything, their share is actually getting a lot smaller. What we're seeing is growth in the auction, a topic we've spoken about, previously before, and the move to passive flows and what that means in terms of auction volumes, but a lot of liquidity driving into this sort of off book on exchange mechanism that we see. This would be the likes of BATF on CBOE. It would be, there's other mechanisms across Europe where they're off exchange trades that are being reported and under the exchange regulation. So we're seeing this drive and this continued story of things going away from sort of the lit continuous and trading in other mechanisms. Now, if I go on to our next screen, I wanted to just pull up Japan for a little bit of contrast. So obviously the last two, regions we're talking about, the sort of European equities and the US equities, enormously fragmented. And we'll talk about, the scale of that later. Japan is a fragmented market. It has the primary Tokyo, but it has OTC trading. It has sort of multiple PTS, as they're called, which is proprietary trading systems where you can execute away from that primary. But the difference here with Japan is you're still seeing that continuous is still, the vast majority of liquidity. So I think the story here is that the US and Europe are kind of following this similar trend of a lot less going via sort of the main exchanges and the traditional exchanges. But in other regions, it's perhaps not as simple and not as consistent there.
Yeah, I think that's super interesting because the lit seems to be kind of drifting upper left, downward right, and it's getting squeezed a little bit by the ATSs, by the wholesalers, picking up the retail, particularly in the US, but similar trends in Europe. It's nice to see a relatively unfragmented market in Asia. In US, it's 16 exchanges, 30 plus ATSs. Can you focus a little bit more on those ATSs and give us a sense of what's going on there?
Yeah, so maybe if I go on to the next Vantage view, you'll get a bit of picture of this. So here I can see, I've just that same view as before, that same information. It's the US market over the same period, but what I can see now is just the ATS and so what's sort of trading in dark on dark pools and ATSs, and what's OTC. Now, there's a period in 2019, previously where there's, a bit more is going on with the ATSs, but we can kind of see, certainly in that past few months, it's remained relatively static, sort of 3/4 on the wholesale, one quarter on the ATSs. So that growth away from the exchanges isn't, it's all going wholesale, it's all going ATS. It's kind of both of those pies are getting bigger as we go through. I know we've talked about retail a lot before. Typically you think to an extent a lot of that wholesale activity is retail. You think a lot of the ATS is institutional. I think it's a bit more nuanced than that, and I think there was an article last week by Phil McIntosh where they sort of said something similar, but it's kind of a proxy that and a way that people think about it. But I guess what's interesting and a story thinking about what's going to happen next year, especially in other parts of the world, is what's going on this OTC bucket. So if I look here, and rather than looking at it via the split, but actually what does it look like for in terms of where people are trading, we can start to understand how that volume is being traded in different ways. So, if you look here, perhaps not going to surprise everyone, in terms of where that share is, Citadel, Virtue having large amounts of that sort of wholesale volume that's coming. But if I then drill specifically into the ATS space, you start to see a few interesting phenomena. So you can see something like Intelligent Cross really growing, taking a large amount of the share. Similarly, there are others as well. So, the likes of PureStream, which has been talked about quite a lot. These sort of, if you like, challenger sort of new ATSs coming in with different types of models. PureStream being its trajectory cross. You've got the likes of One Kronos. You've got kind of these new ATS mechanisms coming in that are taking some of the market share alongside things like Blue Ocean. Obviously, 24-hour trading, very hot topic. they're a 24-hour or they're an overnight ATS where you can trade outside of regular market hours. So you're kind of seeing these different ATSs and different ways of trading kind of coming through. The other thing I'd say, talking about fragmentation, you look at this picture and it's kind of a kaleidoscope of all these different venues, all of these different ways that you can actually trade and execute. And it's amazing when you think about it. The ATSs here, you've got, 30 plus, you've got the exchanges, you've got the OTC, you've got this sort of huge amount of fragmentation, and understanding how to navigate that is clearly really important for anyone looking to trade.
Yeah, and for those that are wondering what that big purple slice is, that's kind of going down to zero. That's Credit Suisse Crossfinder getting folded into UBS, I believe, right?
Yeah, that's right. There's you can see if you hover over here, you can see it's Crossfinder there.
Yeah, the other, if people want to learn more about that overnight, extended hours phenomenon, we did put out an article recently that got picked up by Tab Forum, but it's also on our website. People thought that was super interesting just because of, rapid fire. Blue Ocean's been around a little bit, 24X got approval, but as an exchange, you have different constraints in terms of what you can do and what you can't do. OTC Markets has, their ATS, and then the big main exchanges are also looking at it, but they have to overcome, a few of these issues. So this is super interesting, I think, and something to keep an eye on, because as far as I can tell, it's only going to go one way. Can you get into maybe a little bit more around, kind of the ATS models seem to be changing a little bit, I guess is what I would say. Whereas before, you had to take your company and then go put it in Europe, or if you're in Europe, you had to go put it in Asia or whatever else. The ATS seem to be partnering a little bit more strategically. And could you spend a little time, talking about that and where there might be some insights where people can kind of see where it's going, Canada, for instance, maybe?
Yeah, so I think the first thing to maybe do is explain a little bit where this data comes from and what we can see here, and then what that means compared to other regions. Because so the data you get for this type of information comes from FINRA. It's provided aggregated on a weekly basis per symbol, 2 to 4 weeks delayed, depending on the particular type of instrument that's traded. So you don't get a lot of so you get fewer insights perhaps there because you're only seeing this at an aggregated basis. But you're right, Rob. Other parts of the world, Europe, Canada, Japan to a lesser extent, and Australia as well, you see different levels of information about what's going on in the dark, where it's actually being executed, and how that happens. In the US, you either get told it's on an exchange or you just get a print saying FINRA. There are a couple of lit ATSs where you get a little bit more transparency, but for the whole, it tends to be non-visible. But what we can do is look in other parts of the world. So a classic example there is Canada. So again, to your other point, PureStream didn't launch its own ATS there. The technology is being provided as part of the NASDAQ offering. So NASDAQ have a PureStream service, and we can actually see how that volume has changed and progressed. So here I've taken a sample of stocks on NASDAQ Canada, broken down the volumes, looking over the last 6 to 9 months, just to show that you can see exactly what's there. Interestingly, you can also break out other things like the MELO, which is sort of their smart, their sort of fading quotes, and see how that's grown as well. I mean, it's worth pointing out, like a lot of these things, they're still relatively small proportions of the overall volume that's coming through. But the point is, you can kind of break that down and start to get a picture of how that's doing, especially when, we'll talk about it in a minute, looking at what's happening across the pond in Europe and the UK, and some of the trajectory crossing, which is a hot topic and is going to be a hot topic this year. Being able to understand what's happened in those other regimes, I think, will be really useful for anyone trying to understand and read the runes about what might happen. Now, talking of granularity, what's really powerful in Canada actually is you get broker IDs as well. So if I go through here on our lab notebook, you can kind of see and split out what's happening on the buy and the sell side in terms of the buyer and the seller of, in this case, just these pure stream mark trades. So you can actually get a picture for the dynamics, how it's going on, what that looks like compared to the dynamics of the market as the whole. Is it, a few early supporters of these types of mechanisms, or is it sort of just a reflection of how the overall market's doing? This could be a topic in its own right, and certainly an area I think we'll look to talk a little bit more about in the future. But I think it's just a useful thing to flag up here. Now, in contrast, trajectory, and we talked about PureStream quite a lot. Worth pointing out, PureStream is sort of a streaming sort of extension to that sort of trajectory cross type mechanism. Europe is also looking to get trajectory crosses, and actually, what the UK is in Europe, there's some debate now, and I think there was some change in regulation around what ESMA have defined, and there's question marks over whether or not they're going to be able to be included. So, there's CBOE and Aquis both announced they were going to launch a trajectory cross service. NASDAQ announced that they were going to have a PureStream product in the Nordics. But there's clearly some divergence between how the FCA and ESMA are thinking about this, and watching that trend will be really, really powerful. I think it's worth pointing out as well on that we can already see CBOE's VWAP product, how that's doing on the London listings, because that is something that's been approved by the FCA. But question marks over when and if it will arrive in Europe. But we can start to see and track how that's doing, as that service came out really late last year, so kind of early days to see how the uptake of that comes on.
Yeah, I mean, the one thing, just to backtrack real quickly, when you were showing Data Lab and the Canada broker data, I find it interesting because there are certain broker dealers that say that they have to go everywhere, right? And they make a point of being kind of first user, and others are like, well, tell me when your liquidity gets to a critical mass. That granular data actually tells you which broker dealers are accessing this. And so if you're on the buy side and you say like, hey, I want best execution no matter where it is, your broker might be outsourcing that to another broker, right? So just one of those things, when you start to peel back the layers of the onion and start to go down, from the top of the book, you start to pick up some of these nuances. But super interesting. And I guess, Elliot, on your last point, when you start to see these things, just around the growth and the innovation of the ATSs and the different models, I guess one of the other, really big announcements that we've made is the Opera data. And I know that there's other markets that trade 24 hours, but how do we kind of wrap all this up to get people's head around Opera data and how big that is, and how should they be thinking about that?
Yeah, absolutely. And maybe we'll start on the Opera piece and then come back and look at the overnight trading question in there, because I think we onboarded Opera late last year. Certainly a data engineering challenge. You get about 4 terabytes of data a day. But that, it's enormous. And the way I think about it is, in equities, every time Apple moves, Apple is going to move across every venue. It's also things like the SPY ETF are going to move, because obviously the S&P 500 is going to therefore move, and there's going to be arbitrage. With options, you have a whole curve that moves every time. So the volume of data you get is so much larger. That coupled with, dailies, weeklies, the growth of 0DTE options has meant it's a huge data and a huge engineering challenge to do that. Now, we're sort of, new into our Opera world, and we thought we'd pull out on the lab and have a look at some of the, bit of a 101 starting point on some of the topics that we're seeing within Opera. So firstly, it's worth reminding what Opera is. It is kind of the SIP. For those who don't know, it's kind of the SIP equivalent of the equities feed. So you get every single options trading exchange reports its best price. It creates an MBBO offer, and then you get all the trades as well as some other messages that come through. a big difference with options trading versus equity trading is options trading is on exchange. So there's none of this chat around ATSs and everything else. It's an exchange which you trade on. So what I've got here actually is then how that data is traded, because as well as ETFs and equities which are traded, you also have funds that you also have indices that get traded, the likes of the weeklies on SPY. But you can kind of see if you look here, perhaps not really surprising. You see the likes of Nvidia, Tesla, Apple being the largest equity stocks that are traded. Similarly with like Google and the Mag 7, kind of your big expected ones. You know, it's really the equities and the ETFs that are dominating it. And yet, perhaps not surprising, it's SPY, it's QQQ, it's IWM, that's the Russell 2000 ETF. So it's these big ETFs, it's these big equities. There's a real sort of concentration there in terms of volume that's traded. This is looking at like year-to-date volumes, I think, in terms of what we've pulled out here on Opera. Now, with the NBBO, you know, there's an NBBO in the same way you have an NBBO in equities. You know, a really important question there is, well, what is the breakdown across these different venues, these different trading venues, and how does that split change? And you can see 18 options exchanges. I think there's talk of even more coming on. So again, you've got this massive amount of fragmentation in terms of where things are trading. One thing that we kind of put into the data set to help understand that is actually what you know, when it's traded, what on an event by event basis, what venues are actually at NBBO. And there's a whole different sort of view on that and understanding that, because it's a really common question you want to ask in equities is, well, what venues are actually setting that best price? Where is that best price? What do I want to do from a routing decision? What's interesting when you look at this from an options perspective is there are different matching engines and different ways that people can trade. Unlike in equities, which is, you know, apart from the, there's a few nuances, but it's mainly price time priority. In the options world, you can have some pro rata matching, much more like you have on something like CME or some of the derivatives venues. You can also have sort of hybrid matching mechanisms as well, which kind of do a bit of both. And what you can see here, if I look, it's Memex, it's Cboe, it's NYSE. They're kind of the ones at the top in terms of time at NBBO, not necessarily reflecting in the same way in terms of what is having the largest volumes that are traded. Now, some of that as well, when we started to dig into it, is to do with what's trading on the floor versus what's trading, you know, electronically. So there's quite a lot of a nuance here in terms of understanding how different things trade on different venues, how to navigate that fragmentation picture that's going on. Now, we've spoken a little bit about options, about retail before. That was kind of the big theme of our last topic. One thing that's worth pointing out, and you can start to look at in the options space, is, well, what's retail trading? Because kind of a big story, you know, the last few years is everyone's, you know, trading on Robinhood. They're going in, they're clicking through. They're not just trading equities; they're actually translating that to
Reddit. You know, it's been going on. Yeah, it's crazy.
Exactly. So there isn't, you know, as always, there isn't a nice, helpful flag in your data saying, "Hey, this is retail." But there are a few proxies we can do. One of them, and there's a bit of work in the literature you can see about, is, you know, this order type called SLAN, single leg auction trade type. There's been a fair bit of literature that you can perhaps use this as a good proxy for understanding retail. So we've sort of started to take a bit of a look at that, understand how that's trading. You can kind of see that volume represents sort of 15 to 20% of the options volume that's trading. So you can start to build out a bit of a picture of the proportions. Like the equities picture, there isn't, apart from, you know, EDGX, there isn't an exact flag saying this thing is retail, but kind of gives you a starting point in terms of understanding how the Opera data set behaves, what's going on in the options market, and what that might mean from anyone trading, whether you're trading options or whether you're actually trading the futures of the outrights as well.
Yeah, and maybe just that proxy might just be the change in the proxy that can give you a sense of, is retail picking up momentum or starting to come back? A bit of a, you know, not leading indicator, but as close to a real-time indicator as you're going to get. Interesting. Okay. We do have a couple questions. Is there anything that you wanted to cover before we go to Q&A, Elliot?
No, I think let's proceed onto the Q&A section.
You want to take a look and see if anything.
Yeah, I'll start on the first one, which is the market share. So we use shares traded for that. That's because historically FINRA doesn't provide a notional volume for their breakout. They added that sort of last year or so, but sort of looking back further, they only provided the trade count and the volumes, which is it's kind of how the US tends to look at market share anyway, rather than notional. More recently, the FINRA data set does include notional volumes as well. So that's something you can look at more recently, but if you're looking at the past, you've not got an even proxy on that.
Yeah, US still being, commissions being cents per share. And that's why as a global program trading guy, I always love getting paid in basis points. Wish we could have converted a long time ago. So one of the other questions says, as ATS volumes continue to rise in the US, how will this impact the NBBO as a clean metric? Are spreads being impacted? I will mention that, there are some ATSs like Intelligent Cross that have petitioned to become part of the displayed facility, so they get paid for the quotes. So they have two different data streams, one being lit and the other one being dark. But if you're, unless you're a round lot on exchange protected quote, you're not really contributing to the NBBO.
Yeah, and I'd add a couple of things onto that. It's what makes up the NBBO, how that works is like it's kind of its own sort of whole. We could do a whole webinar on it. I think there's a few things to think about and look forward as well. One is changes to regulation around including odd lots in the SIP. What that means, we tend to look at it in two ways. So we'll look at the NBBO, which is, as Rob said, is the round lot kind of regulatory view of it. Obviously, ATSs use the NBBO. That's kind of the regulatory piece they use. But the other one, which for certain stocks does make a difference, is using the best price that's on exchange, full stop, which is what we call a CBBO, which might mean when there's less than 100 shares. Obviously, for some stocks that are relatively tick constrained, it's not going to be too much of a difference. When you have large stocks, your Berkshire Hathways of this world, that can be quite a big difference. And actually understanding that whole dynamic is going to be really important as well. The other way you might want to understand this from your own point of view and understand what that means on spreads and how to look at it is obviously you can take the OTC trades. You're not going to know which OTS or which broker it's gone on, but you can see kind of a trade by trade view of the OTC volume that's going to be on by the SIP.
Yeah, I think you're right. This could be a whole nother webinar. The whole payment for order flow in the US is based off the NBBO in terms of price improvement. But what Elliot was just referring to, the CBBO, which we call the consolidated best bidder offer, we pick up the odd lots. But when you're talking about the NBBO, it's round lots. And so, what's in between that, NBBO best bid and best offer, you don't see the odd lots in between, but we do pick it up. And so there's been a big debate, is the NBBO really the best proxy for price improvement? There was another question. Yes, this is recorded and we can replay the recording. Elliot, last question on retail in the European markets. Is there anything that you wanted to add there?
Yeah, sure. So, and there's actually, I see there's one on the US as well. So maybe I'll just answer retail flagging in general. In general, there's not like a clean way to do it. There are certain markets you can do that on. So in the US, CBOE EdgeX has a specific Edge or Exec. Apologies, I can never remember which one.
EdgeX.
Is it EdgeX? Yeah, that's right.
EdgeX and MyX, I think both are
Yeah.
the two that have the retail flags, right?
Yeah, they have a retail flag, and EdgeX specifically has retail priority. So if you flag your order as retail, it gets priority over orders that are non-retail. Still price time, but you get that difference. In general, no. In the US, you've got to use proxies. The story's similar in Europe. There's obviously a lot more complexity in Europe because retail trades in different countries very differently. On the UK, it's via the RSP network. You've got in Europe some of the pan-European ones, so the likes of Equiduct. Their Apex trade flags will flag between what's institutional and what's retail. Zitra and Madrid both have flags in their data, and then other markets there might be proxies that you can use. Best of Book, of course, does as well. So it's not a uniform thing that you can do. So it's kind of a mixture of good proxies as well as some explicit flags. Within Vantage, there is a retail data set as well. So happy to follow up more on that to show, we'll follow up, and any questions we didn't do, we will follow up as well with the individuals who have sent them and provide some more details.
Yeah, no, that's great. And, if there are any other questions, just shoot them into us. We'll get back to you in due course. Elliot was using a lot of Vantage, and if there are any of those slides that you want, just reach out and we'll get you sorted so that you can replicate those. And I guess, just to wrap it up, on behalf of BMLL, I'd like to thank everyone, for taking the time today. We hope, you found it interesting and insightful. Elliot, any last words from your side?
No, thank you very much, Rob, and thank you everyone for listening.
Great. Have a great day, everybody. Thank you.